see. You've obviously been to Kim Riley and the rest of the management, so you're aware of their trading plans and so forth.
I used to, haven't I? I haven't seen him in a while, to be honest. His trading plan is actually very simple. I was looking because I was trying to set up some speaking engagements. Universal Trading Solutions doesn't exist anymore. Do you know what
Yeah,
happened? You know what happened to them?
no, just gone.
They're gone?
Yeah, I haven't seen them around for years. All of them,
Hmm.
they used to have everybody available, you know, Simon Martin,
Yeah, what
Osborne
happened to that
Pew
guy?
there. I don't know, they just vanish. Even if you do Google searches, you can't find them.
Interesting. Is it
Yeah.
because after when things got too harder to teach there, like you need all the certifications and stuff? Uh,
There's a couple of guys from memory, right? Just that they did teach.
uh-huh.
I think one was Carlo Castellano.
Yeah, what happened to that
He,
guy? I've heard of that. I've heard of him.
I don't know if he's gone to ASICS or they're investigating him as something as well. He did something wrong. Breakthrough events, that was another one. I don't know where
Breakthrough
they are.
events. Yeah, breakthrough events with man, what is his name? I know the guy's a bit dodgy.
They are dodgy, man. John Giannopoulos or something like
John,
that.
yeah, I
Yeah.
put money into him. Yeah, never
Oh,
saw my money back, mate.
oh, right.
He because he was he got out of breakthrough events, right? No, breakthrough
Yeah.
events was his own, and he came to us and basically was asking, hey, you want to put into my company, blah blah blah, and
Yeah.
you'll receive, I think, 10% or 20% or something.
Mm-hmm.
And when the crunch came, he disappeared. I didn't see any. I didn't get
No,
any of
no,
my
no.
money. So, like,
This is the only guy that I know that's still around, Jamie
yeah,
McIntyre.
Jamie McIntyre.
He's the only
Um,
one that I know that's left.
but I heard from a couple of the guys when I was there too.
Yeah.
It's like oh, I don't know if they put money into him or they paid something, and
Yeah.
yeah, it apparently wasn't a good experience. So I don't
Mm.
know. Um, the other person, what's his name? Billy. He's doing the trillionaire.com. Oh man, what's
Nick,
his?
Nick Halleck is another one.
Yeah, Nick Halleck. That's it.
Yeah, oh, I know him personally. I met him. I stayed with him, actually. I know him.
Yeah, yeah. The last
That's
time I
amazing.
spoke with him,
Yeah, there he is. I
yeah,
can
when,
actually know.
when we both got interviewed by Boss Data. That was the last time.
Yeah.
Yeah.
Sorry.
Okay, not a problem.
So, yeah, so I don't know where they all are right now. So
Hmm.
it'd be good to get their database, but I don't know where they are now.
Yeah, I heard Kim Riley. The last time I heard with him, he went AWOL, like wanted to be a hippie or something like that, and then
Yeah,
came back, right?
lost his marbles.
Spoke with in front of Anthony Robbins, and then that is it.
Yeah. Okay.
Hmm.
Strange, mate.
Yes. All right,
So, yeah,
show
look.
me. Show me.
So, okay, so let me just talk out loud here. So, looking at, from my education the previous, so this is the uptrend, right?
Mm-hmm.
Nice and easy, that's obvious. This is the counter trend, and this price bar, when I move my icon, see how it's like a bullish update? I used to describe it as well, remember? Like
Mm-hmm.
that. So that's obviously too late. That's obviously not the demand or buying at demand, or that's the confirmation that I used to look for to determine that professionals or buyers are coming, it's going to go to the upside, right?
Mm-hmm.
That pattern there. But when I look at M1 or for Forex, because there's no gaps as well. So this is the CAD-C, but see how it was, I got it right here, it was drifting down,
Mm-hmm.
demand running out of steam, but in my eyes, I couldn't determine that as an entry point because I'm still hell bent on looking at higher lows, higher highs, bulls and control. I'm still, I don't know, you could probably say fearful as well that I wouldn't buy with sellers in control, lower highs, lower lows. So even from how I listen to you as well. Like you might say, it's not an entry yet because certain things need to line up or looking for certain indications. So what are you looking for in terms of an entry point that says, all right, this is good? Is it just purely a demand and supply only? Is it constant for the trend or?
Alright, good question. Okay, just 1 second. So you're with the dollar CAD. Let's go. Yes. Dollar CAD, dollar CAD, dollar CAD. Based on the daily chart. Alright, I'll pass, I'll put it back on to me.
Okay.
Okay, we were over right there, right before boom boom here. Okay, now what happens is that the brain is actually very tricky sometimes, because if we're, what would be the word? Because humans are more logical. Like, you want to see a foolproof right now, like what's happening right now, and it is a bit of a challenge to see the unforeseen events, right? Because this is the challenging part, is the future. Okay, this whole big picture right here. Because the wall hasn't been painted yet. But if the wall has been painted, then it's so easy to see, right? And hence, everything looks good in hindsight. That's what I was actually doing as part of experiment in terms of the newsletters have been sending, like, let's test your trading skills.
Yeah.
To be honest, I haven't received any answers from the last ones, or for especially with the euro against the yen, and see what they would say or give. And the reason why this is my only conclusion is that they don't know what to basically say, because they just don't know what this will bring. I mean, even I myself, I don't know whether this will come back all the way down here. But what we're doing is mainly having the probability. Where is it going to hit? Is it going to come back down over here, or is it going to go continue to the upside, or is it going to hover to the side on the sideways movement? Okay, so what am I looking for? Now here is the key. Method 1 states that if it's in an uptrend and it's in a level of demand, then we have to buy, because the risk is very small and the probability of winning is very high.
Stop there. When I did the analysis on this, your last point to me before we left was it's still overall in a downtrend. And I remember that little stumbling block.
Okay. Alright, so let's go through here. It's overall in the downtrend from here, right? Like, say here, because this one existed. Obviously, this one didn't exist.
Yes.
Now, if I say it's an overall still a downtrend, because prior to here going up, this is where we were on that point. So if you go to the daily, that is the February 14th, February 3 plus 7, so pretty much on this side right here. 11, 24, the 10th, 14th, and yeah, we're on this point. Now, overall, yes, I stated that it overall is still in a downtrend, right? See here, downtrend. But from here, though, it's now in an uptrend. Okay, so from this point, here's a downtrend, but here's an uptrend. If, now provided, that I stated a caveat, I don't know if you remembered, that this has to break in order for the trend to continue.
Yes, I do remember
right?
that.
Okay, now, but we drew this line as well, and there is this distance in order for it to cover. From parity all the way to 1.0075, 1.078. So it's approximately about 80 pips to the upside, right? Okay, now in terms of the risk, say if you're going to enter in a level of demand, the probability that it could go up is highly probable, with the caveat that if it breaks through this downtrend, the short-term downtrend, then the continuation of the trend of the uptrend is going to continue to go further.
Yeah.
Right? Okay, now what I'm looking for is these segments, these little pieces right here. Those are the stuff that I'm looking for. Okay, like from the demand, there is some empty space. From the level of supply, there's that empty space. But obviously, it is a better idea with the highest probability of winning for the trend if your buying is in an uptrend. If you're selling, it has to be on a downtrend. Right, so here's a great example. Another great example was the euro against the yen. Euro against the yen, they didn't exist on these points or on these levels.
Yep.
Okay, I'll go through there, cut across through there. See, notice how around these points, yes, we can short that from here to here, from about approximately 125.50 all the way down to 123.82. So there is that probability that it could fill this blank. Now the trend over here is a downtrend. If we go to a shorter time frame, it is a downtrend. No doubt about that. Similar with the dollar CAD. So when I say is, well, it's a downtrend, we go through this point, it is a downtrend. Because if we go through a smaller time frame, like say the 4 hours,
yeah.
So they are still in a downtrend. Lower lows, lower highs, lower lows, lower highs. And then out of nowhere, this created a base, didn't want to go below those lows, breakout. So those are the signs that you need to look for. Okay. Now going back to euro yen, go through the daily. So I just basically lost what I've got right there. So there is that empty space that I need to fill in. Bam, try to fill in. Didn't want to fill back in, but breaking out to the downside. Came back, see how they filled this. Look at the high filled in. Didn't want to go continue and tank all the way back down. That's pretty much where we're at today. So the things that I'm looking for are those middle empty spaces, because the trends as part of our definition, you know, higher highs, higher lows. When there's a higher low, there's a higher high, stabilization. Then one point in time, they have to fill the empty space. When there's a lot of movement, they have to fill the empty space. The markets cannot just sustain itself to keep going to the upside. Oh, sorry. Sorry about that. Yeah, so it can't sustain itself to keep on going within the trend, or else it violates the laws of pretty much trends, right? Or oscillations, you know, where there, or sine waves. They have to, at one point in time, they have to follow that, and that's what the market's basically able to do. They create some form of news in order for it to correct itself. And they have to follow those for some reason. Why? I don't know. It's just the way it is. It's almost like the mass of the media. They already know that if it's a level of demand, There's a supply and there's a level of demand that will be part of the trend before it can continue to go further, right? So, I mean, if you look around, it's everything's in there. I mean, your voice, my voice, music, they oscillate. Guitars, tones, they oscillate through waves. Light has waves, so light doesn't just go straight on a straight line. It oscillates. So I believe it's just part of nature in order for things to oscillate. And hence, so to make it more now realistic is that if there's going to be now, see how here we're going to lower lows, lower highs, lows, lower highs, lower lows, lower highs, lower low. Next one, lower high. Right, so here this is what we're looking for. This big empty space right there.
Oh, yeah.
So here is what it can do. But for some reason they have to. They cannot just go down and tank. I mean, it's possible, but if it does, then it has to be the same. That's why, law of angles, when they drop, it's almost the same. To go that way. See, here it is smooth. Look at that. Bam. See, then now they have to fill this empty space. This one filled it. Now it's reaching this demand, but it better demand level. That's why we're saying it's not ready yet. They have to drop around here because this is a really, really good support. Yes, currently it's a good support. There's a supply over here. There's not enough. See, here in the past, there's nothing that's dictating that this is going to be strong unless we will see consolidation here and as part of a rebound, and then they may retest again, rebound, and then failure, bam. So that's what the market can do. So, but from these levels, see here, push it down, rebound back up. But such a big drop, what are the odds that it can just minor correct itself and continue to go? So in a continuing uptrend, this is a much better bet of buying before it can continue to go to the upside. Well, the other part here too is, oops, I want to be more specific. See, that one definitely broke already. Now let's go through, let's look in a bigger time frame. What does it look like on a bigger time frame? Lowest low, lower high. See, with such big movement, oops. Just delete that for now for a sec. That's why primary, secondary trends and so forth are important. So if you now look here, yeah, the week is not over yet as far as we're concerned. Yeah, the price can go all the way to 122 by Friday. That's if it chooses to. But if it doesn't want to, then there's that big empty space around here that it has to fill in.
Yeah.
Then how do we know that? Then if we have the trend, then the market can go like this. Before it can continue to go to the upside. Okay? Because this here is a big distance between the two. They have to fill that in unless it will create a new line later on, or new line somewhere later on. Right. The other thing that I'm also looking at with the trend, where can it meet from the trend and the demand? So here's a good level of, here's a supply at this point, but there's also good demand levels right?
Mm.
But there's nothing strong around here except for this part. There's one right there too, here. The 1, 2, 3. There's 1, 4, nothing in the past, actually 5. Cut across. 6, 7. So there might be a valid reason for that price as a demand level. It could be pretty solid between 117, 118 to 118.49. Right. So these are my rebound levels of the markets, meaning that if the price chooses to drop, these are the rebound, and it will retest, then drop, bam, bam. And funny enough, here is also the good demand level. So is it a coincidence? No. But definitely professional traders like you and I are looking at these levels.
Yeah.
Because they analyze the same in the past, and institutions who can see a little bit more order flow, they already know that if there's a lot of people supporting this price, then this is where, through ECN, right, you can see the amount of buyers in there. So these are already being dictated by institutions. Hey, that's the price point of where the strong demand is. Strong demand. See, the problem with us, though, is that since we are not at the markets, we don't see supply and demand. But this is that numbers and what they're looking for. So maybe over here they're supporting what, I don't know, 100,000 lots or something like that, some big number in order for institutions to be sorting that price, a big number in order for that to be supporting that price. And if you're trading stocks, you will see, if you get your CBA, right, you will see based on the bid and the ask, if someone is basically trying to put an ask in there, they're supporting a lot of buyers on that side. And then you'll see a big of a rebound. Now, if there's someone taking it in, either it will go up and people start to buy. Now within that, from higher high, higher low, and the next logical explanation will only be a higher high. Okay. See, look, 1, 2, 3, 4, 5, 6 months. First time within 6 months that sellers basically push the price back down. Are we in the down? Currently in an uptrend? My point of view, it is. Okay, let me go through. There's 145. We can also put through here, now even through there, with a clear breakout of this downtrend over here. But it's got a long way for the euro against the pound. I mean, euro actually, I don't know why they actually already have euro here, because euro didn't really exist till what, late 1999 or something, or early 2000s, pretty much around that level, right? So, so technically speaking, if we're looking at the trend, yeah, from here, or this is where probably, I don't know, where it started, the euro. From an uptrend perspective all the way to the downtrend perspective, see how through there we were there, we looked into it. So there is that room in order for this price to head back higher high. So they have to fill this space with such a big push to the upside. Why? Because also a big push to the downside. Now, but they have to create a higher low before a new higher high will occur. And that's what we use based on our fibs and things like that, right? Retracements from that low to the current high. Right now we can see the first level of retracement is that 115. Is it a coincidence that it's a demand, supply, demand breaking out? And about that 115, so if we go back to the daily chart, 115, see here, is the first level of retracement. And then from the top to bottom, to 115 is the equilibrium from here too, right?
Yeah.
So meaning that with such a big drop, they first have to feel, they have certain conditions. They have to go there, 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 and then have to make a decision probably, bam, to the upside or continuation. Or they can come back down, level it, bam, and continue. And that's part of the conflicting between the downtrend and an uptrend. Who's going to win between the downtrend and uptrend? Longer term, obviously, within the uptrend, right? But this trend definitely has been broken. We have serious lower lows, but the low is still higher compared to that. So technically speaking, everything is an uptrend, and as far as we're concerned, this might just be a correction before continuation to the upside, with the condition that it has to break this downtrend. That's the only time where downtrends has to break, is when, if a continuation of the trend is when the downtrend has been broken, right? So higher highs, higher lows. Look at that. Breakout, bam, then therefore new higher high. Higher high, higher low. Look at the trend. Downtrend, breakout, bam, new higher high. Higher high, higher low. There's a trend. Boom. Breakout, new higher high. At the moment, there is nothing dictating that will create a new higher high, provided that this trend has to be broken first in order for a new higher high to form. So the question next is, what if the high doesn't want to supersede? And that's when this where I do love, and sometimes when I don't get meticulous with analyzing, that's how I get caught. So meaning, if something like this, 1, 2, I was having 3, boom, 4 here. These are the things I do love. This is what I'm looking for, is that if the high, this one, look, the bulls are very bullish. Higher highs, higher lows. Higher highs, higher lows. But the high, or look at the close, and the close didn't want to keep on continuing to break this high. That means to me that it's exhausted. No more. It doesn't want to. The price cannot continue to go further the high of this, which is now 127.70. Right? And hence that failure keep dropping. Look into that. And also part of this is that, well, it is still within the trend. It is in a level of demand at 123. So the odds and probability that it can come back at 126 is highly probable, provided that as well the trend will only continue if this downtrend line will be broken. So in terms of the risk, wherein the risk is very small with the highest probability of winning to go to the upside, bam, right? But the price didn't want to supersede and go beyond, and failed. And now it's reaching between two midpoints, and they have to make a decision. Either to continue and break to create a new higher high, or break to go to the downside to come back all the way through 118, 117.
Yep.
That's where we are at. And so, yeah, to answer your questions, what am I looking for? The highs are important. What I'm looking for, what is the trend? What am I looking for? That empty space. That empty space is so important, because that's what gives us those probabilities. So now here we have that a big empty space. There are a lot of things that we can do. We can play with it. So obviously with this one is not ready. You know, much better price of buying will around be here if it continues not to go further. Caveat once again, if the lows doesn't want to supersede all these lows, then no doubt the price can come back all the way to 123, another 300 pips to the upside. So yeah, these are the things actually. See, like Sunday, Sundays or Mondays, and you guys have the advantage because you're one day ahead.
Mm-hmm.
So it's something like this. You see something like this where the price is not going beyond, because if we go through 1 hour and look into that, see it already gapped. Part of that gap came back down. Exhaustion. They try to have another push. Look at this. No more, no less. Your risk is actually pretty slim. And then out of nowhere, bam, it tanked like a bag of potatoes. See here, another correction, continuation. But now, can the price go beyond here? If the price doesn't want to go below these areas, then back to the buying board, or to the buying area. Okay, another example, here is the Aussie. 10, 9, 8, 7, 6, 5, 4, 3. 3 o'clock, 2, 1. This is where we were, right? Notice how the lows didn't want to supersede this low. Hence, it came back all the way here, 102.90. I believe I got taken. So in terms of day trading environment, perfect. See, 1, 2, 3. So I did get taken. Hang on, so let me double check. Yeah. So for a short-term type of trading environment, right, you can see here the lows. The lows are important. When there's such a big drop, they have to correct itself. And hence, just luck once again, a part of that to get through that 102.90. Then you didn't want to comply anymore, so worth it from here. Better of shorting rather than buying, to be honest, because it can come back down back to 1 to 50, 1 to 40, 1 to 30 even. Okay, but overall, if we look into that, yes, it is a downtrend, weekly, also in a sideways movement. Right, this is what I want to see by the end of the week. Here's also another technique or the tips. The lows, if the low of this week doesn't want to go below this low from last week, then we'll be buying that. We'll be buying more actually, because now the probability that it may retrace and continue to go to the upside is highly probable, because the low didn't want to go no supersede this low right here, or even that low right there, right? Because they've been very choppy at the moment, so there's a probability that they may even, who knows, whatever Bernanke is going to say tomorrow or Wednesday and Friday, this one, if the low didn't want to go, then boom, they can push the price all the way to the upside. Because at the end of the month, they need to dictate what type. At the end of the month, as far as we're concerned, it can go all the way 103.75. So the question is, what if it doesn't want to go 103.75? What if it continues to drop? They can push that down too. Then that means in March, we will see for the first time for the year that the Aussie can come back down below parity. March, because we're already February, or March or April. If they break 101.49, easy, they will tank. The Aussie will all the way come back down to about 96, 97 even, 97.50, around this level. Yeah, they're just playing a game, right? So it's been a long time. Since 2011, 110, it's just hovering. They don't know where to go. No one's sure where the price of Aussie can go. Can it sustain to go above 110? It could, but they need a lot of evidence or enough proof. What can the Aussie bring to the table in order for the value of the Aussie to be 110 and beyond against the US dollar? And if it does, then I ain't going home. Because it's too expensive, right?
Oh, yeah.
Unless I start seriously making Australian money. But other than that, no. Now, if tanks come back down below parity, then even better. Then I'll be happy. Then I'll definitely be going home. So yeah, these are the things. Like now, see here, it's in a downtrend since 2011. Here's a much better probability to short rather than to go long. So if my own perspective, then whatever Bernanke and so forth is going to say, then it's much a better way of shorting the Aussie against the US dollar for longer term. Right. When can be a better one? Well, obviously you can play a game within a game.
Yeah.
We can go long about 104. When it reaches 104, then we short. So these are our trend lines. Hence the terminology trend lines. Part of the trend within our domain. Low risk, high probability that if it continues to drop, much better. The other one, another great example, is the dollar against the Swiss. Doji, still pretty much in a downtrend, created a new high yesterday. But this is a better tool for me. I'm currently just looking into this at the moment. I actually missed out on the price when we were analyzing this in the afternoon. See, in a downtrend environment, not valid anymore. They broke. We're currently through here. If this one breaks, then definitely we're in a new change of trend. Okay. Other than that, we're definitely in a downtrend. Series of lower lows, series of lower highs. What are the odds that it can come back down now? I mean, there's a high probability. But if the price reaches the demand and it doesn't want to supersede this any longer, then somewhere, sometime in the future, this will change in a different direction to go to the upside. So definitely in terms of risk environment where it is now in a supply, the odds and probability of this dropping is highly probable, and our risk is actually pretty small. So this is actually my trade. I'm currently looking into this at the moment because this one has a higher probability. It's an easy trade. Did I explain myself, Harry?
From what I've been seeing, there's no one way to enter an M1 from what I've learned. There's no, this is a picture of an M1. It's like a Rubik's Cube. Every entry is different.
Okay, close your eyes, and this is the picture of method 1. You see a series of higher highs and higher lows. Yes. Now just imagine it created a higher high, and now it's forming all the way down to the higher low, and it's on a demand. What hasn't happened yet is now from the higher low to the next higher high. Your job is to buy at a level of demand at a higher low. Okay. On a downtrend, there is a series of lower lows and lower highs. When the price reaches a level of supply and it is on a downtrending, at the same time it is on a lower high aspect, that's where you're going to sell. That is method 1.
how much weighting do you put on the variations of the following? So right now with dollar Swiss, it's lower high, high low sellers.
Mm-hmm.
Previously it was higher high, lower low buyers. The one before that was lower high, higher low sellers. So the variations of higher high, higher low buyers and sellers, who's in control, how does that affect the entry at a demand or supply level? Is it pure, is there anything, just say you're going short here, this is looking good because it's got a lower high and it's sellers, correct? So we've got 2 out of 3.
Right. Like, are you talking the whole big picture?
No. Current price action, who's in control?
Okay. So right now, right, we see sellers in control. Yeah. However, now sometimes, what if it is a blue bar?
Yeah.
Right. What if it's a blue bar?
Yeah.
But the highs are lower compared to the previous high.
Yes, correct. This is,
yeah. See, if it's a blue bar or red bar, it wouldn't matter. The most important part are the highs. As long as I don't want to see the high breaking out this high. Because if the high gets broken, right, then that means there's just be more continuation of the price to head further, and they're trying to push the price all the way to this guy right here.
Yeah.
But if the price didn't want to go any further, then look at that. If we just put on the highs itself, then you're in a range, or these are your supply ranges right here. That's your area of supply. Because it's institution supporting that, institution, not you and I. Here's the biggest one of them all, the mother low. They push it all the way and then came back down, right? So these are really the price to beat. Higher highs. Okay, from there. Right. At one point, this was the actual, oops. Not that. That's the actual one right there. But if we really, technically speaking, look into that, this has already been broken. The trend has already, technically speaking, been broken. Okay, what if technically speaking then, if technically speaking the price has been broken, then this is a higher high, higher low. Then does it mean then it can go, the price go beyond through here? No. Then that means then that from the higher high, higher low perspective, then we can only make money all the way to 92.79, even through here, 92.50. No more, no less, because from a higher high, higher low, higher high, then this is now our plan has to change. So we have a new primary, secondary. Then this is the only space that we can make money on around these levels, around this point. No more, no less. Then that means that in a level of demand, if we can see now price hovering around these levels, then this is where we have to buy at a level of demand because it's now in a new uptrend. And how do we know that too, now if the new level of demand is in an uptrend? Bigger time frames, right? So if it's a new level of demand, a new change of trend, see here, clear breakout, stabilization, continuation, correction, continuation. So, but these also are the price to beat. So these are now your variations or variables. Since this is a downtrend, the price has to beat this price right here in order for the continuation of the trend to continue, and it has to beat this in order for the new continuation of the trend to continue to beat this price. And therefore, if that happens, breaking that level, breaking this level, it's a continuation of the new uptrend somewhere sometime, because it's still an uptrend. Higher highs, higher lows, higher highs. The low is still higher compared to that. So higher low, uptrend. See? And it can go there, or it can go there, right? All the way to September 2000. Then if that happens, it can continue all the way from here. Then we're going to be back similar to here, here. See the same pattern. February, March. Right? February, March, till April. You could come back all the way through there. Then if it breaks through this, then that means then if we go through the monthly, where's 2008? 7, 6, 7, 8, still pretty much on a downtrend. But look at the monthly, very, very strong. Hence, the bulls now are dictating that it's going to continue to go to the upside. So which now concludes that if we go to the daily chart, clear breakout, correction, continuation. Right? So to go with the trend. Because next month, the next one has to create a new low. And what would be the new low? The new low could be this price right here at 92.86. Around this point. See, I didn't even create a could go through around these levels too, because it has they have to feel this. See, there's this distance between there. That's from March, can create a new low and then can rebound. To fulfill its job for the monthly component. Pretty cool, huh? Because 1, 2, 3, 4, 5, 6 months in a row to the downside. Finally, it has some room in order for the price to head to the upside. It has to correct itself. So what if it doesn't want to go beyond that? Then at least this is all we would be able to find. From there to there. Approximately, say 50%, which is the high of that one as well, 95.09. So another 200 pips if it chooses to. Maximum to the price around that level 96, so about 300, between 200 to 300 pips to the upside. And if it breaks through those levels, then easy, 99 and above parity. See, that's the thing about M1 is that, yeah, there are different components. The trend has to support its evidence based on the bigger time frame as well. Right? So those are the conditions that M1 has to meet. And then you create, you know, your intention part of that. Because like say here, if you're shorting, say if I choose to short this, I can only stay in 1, 2, 3, 4, probably 3 days, 4 days maximum, no more, no less. Because you know, the trend is still within me, but with the condition that, what if the price doesn't want to go below this, and that's it, you're out, no more, you're done, right? So you take your money and run. Then that's where you go long once again, because now it is the condition that looking at the monthly chart, the bulls are way too powerful.
Yeah, true.
Yeah. Cool. That is M1, man.
The last piece of this would be, like you're looking at it now, right? To go short, the last piece of this would be go to lower time frames to finalise your entry.
Yes. So now, the evidence in a lower time frame is great to look at. Say, now say something like this. See how the price didn't want to go beyond that 93.38. And look at, we're in the level of demand. So what I want to see here is that can the price sustain to go above the 92.38. Bulls are still in control. It's not ready yet because the bulls are currently in control. We're in a shorter time frame, a series of higher highs, higher lows. Next bar, probably the bulls could continue to go through 93.20. So the best price of us buying is around this level. Now, if the price doesn't want to go and it's just sustaining, like going through there, struggling, and that's where we need to short. And if you look into that, look how many times that hit 1, 2, 3, 4, 5, 6, 7, 8, 9. So yeah, it is very powerful. You went to the upside. This is the long-legged doji, that hanging man that we saw on the daily chart.
Oh, yeah.
Right? From there to there, or from here to here. That's where we are at the moment.
Yeah.
So one point in time, they will have to retest these price points once again, with the condition that the price doesn't want to go beyond 93.38. The reason why it doesn't want to go further up or retesting the price because it got hacked to the downside so strong, and of course people will be hesitant to go beyond these prices because now it's like business, right? If you're buying a property at 932,000, downtrend, are you really gonna buy it? No, you wouldn't, right? You're not gonna buy the property 932 if it's on a downtrending market, and probably if you're a seller, now is the time to probably sell it. Or if you bought it around here, then you made 300 grand and that is it, you're done. Because as far as we're concerned, it can continue to drop once again. It's a downtrend. Yeah, so those are the conditions, right, that we as traders have to follow. Hence is where anybody would be able to make money. Position traders can make money, swing traders can make money, day traders and scalpers can make money. Yeah. All right. Any other questions, Harry? I hope that helped today.
It did. I'm starting to really dig deep into this and try and understand the why of everything. And the more I dig, the more questions are starting to arise to just... I understand where Phil was coming from now to get his... he calls it procedures or processes and steps. And I never really understood how he was trying to explain himself. But I do understand now what he was trying to do.
Gotcha.
Trying to get that, as in like the Kim Riley, as in the M2 and the M3, but it just can't happen with M1, in my opinion. Because you can't say 2 bars, the second one lower high. It could be 3 bars, it could be 4, as there is right now. It could be sellers in control, it could be buyers in control. It is such a mixed salad that you cannot describe it. It has to be connected with other factors as well. I mean, the dollar index, I mean, news reports, there's just so many factors to formulate together.
Yeah. The way how can we analyze this? Well, to go to the smallest time frame is to buy at the best price.
Yeah.
You go to the biggest time frame just to see where to go. It's like playing golf. Golf has a lot of factors you need involved, right? You have the wind factor, you have the course factor, the amount of difficulty. Now, it's depending on the way how it's curved and stuff. This is just mainly the curvature of the golf course, right? So the question here is, which one will be using as a form of a club that, now if your goal, if you know that the price can go all the way to 95, it cannot go directly to 95 because in between here are there's bunkers, trees, and everything. Right? You need to dodge them. So in other words, from here to here, it'll cost you about Current price 93.11, 92.50. Approximately 60 yards to the 60 yards as a form of a distance, right? From 92.50, 93.11. So yeah, about 60 yards. So the question here is, what are you going to use? For 60 yards, are you really going to use a wood? No way, because if you're not going to use a wood, your target point will be here, because if you're using wood, your ball, if you're projecting that the ball go to 90.50,
Yeah.
fat chance, right? Fat chance that it will go to 90.50 because they have conditions. This is pretty much another tree that's holding it. So you have to go around it in order for that ball to go to 90.50. Now if your ball basically go to 90.50, and you overhit it, then you're done, you're screwed, because this is your trajectory. And the flag is over here. The flags are your target points. And how many days will it take there? 2, 3 days? Could take probably 1 day, who knows, right? As far as it's concerned, probably a few days in order to get down here before it can continue. Now, if your goal now is to head towards about the 94 area, you cannot buy it over here because you're in a supply. No way. You have to buy it here at a demand. This is your buying area. But you need to take... it's a time factor in order for the price to go to 92.50 before it can go to the upside. Yeah. And the challenging part is the vision, the imagery. Like, how long does it take to get there? Because it doesn't exist. When price exists, it's so easy because because it already happened.
Yeah.
Right. And this is the beauty about technical analysis. That's the art of it. The art is here. How can you finish the picture?
Yeah, you're
Right. Cool. All right, then let's. I wonder if there's gonna be anybody on the other side. All right, let's. Yeah, I will see you on the other side, JP.
All right.
All right. No worries. Bye.